Welcome to Real Estate Investing Abundance, the show for busy, fulfilled professionals like you to learn how to develop financial independence built on solid, passive real estate investments. Now, here is your host, Dr. Alan Lomax.
Hello, once again, enlightened investors. Thank you so much for being with us again today. Always a delight to be with you. Today, we are going to look at how we can reduce risk when investing passively in multifamily real estate. And today, Alex Kingman is going to guide us through the conversation, and she is the Director of Investor Relations at KGI Capital. Her company helps high net worth individuals invest passively in apartment buildings so they can reduce their tax burden, grow passive wealth, and live life on their own terms. KGI Capital invests in distressed multifamily properties in the Southwest and Midwest with over 30 million in assets under management. So welcome, Alex, and take us into the show and share a memorable experience that helped you to be who you are today.
Sure. Thank you, Alan, so much for having me on the show. Really excited to be here. A memorable experience that I've had in my past that led me to who I am today. A couple different things came to mind, but I think one that I think really hits home the most maybe is when I was in high school. I was a sophomore in high school. And by then I already knew I wanted to be an investor and a business owner and that all that. But I was struggling at the time, actually, and I didn't realize it for a little while. But I ended up reading this article, realizing that I was actually really depressed. And at that time, I was doing a lot. My school was an hour 15 away from where I lived each way. So I wasn't sleeping enough. I was just doing homework. My life just wasn't fun anymore. And I just remember after reading the article realizing, oh my gosh, this is explaining exactly what's going on. And I didn't even realize. And then I thought, well, what am I going to do about it? And so I kind of sat there and I was like, well, either I could kind of continue on the path I've already been going, and I didn't really want to think about the result of that, or I could just put all my energy and effort into trying to get out of depression and get out of this and give it my best shot, and most likely I'll probably end up getting there. So I did, and I changed a lot of things in my life. I spent time every morning, every night, just listening to positive, like good mindset, rearranging my own inner thoughts to weed out all of the negative ones. I didn't really, I guess, talk to anyone about it or anything. I just kind of did this, and it ended up being really just with mindset at the time. That's the only thing I really knew about at the time, but I was able to do it with just that, and just get out of depression in that way. Looking back, I could have done it a lot faster than, it was like 6 months. I could have done it a lot faster, but I didn't know anything else at the time, and what I did worked. So that really transformed how I saw my life, because I had a whole new appreciation for it. I was able to think about really, one, like how important mindset is, how important our time is, our relationships are, how important sleep is, and how I wanted to go about my life going forward because of that experience and help others. And so my whole mission since then has been to be able to help others live their best lives, their best one life here on earth, and be able to do that in a way that they really enjoy, and just really just to live their best lives. So that really, really set the stage for everything in my life since then.
Well, to me, that's really quite amazing. I mean, a sophomore in high school, so that puts you about 15, 16 years of age.
Yes.
Most young people at that age are concerned about what other people are thinking about them. Unfortunately, that consumes a lot of young people's reflections and concerns, and just a lot of wasted time, essentially, because that really is a focus of most people at that age. So to me, the experiences that you had and the way that you came out of those, that is pretty unique in and of itself. Just coming to a realization at age 15 or 16 that your depression, and I mean, many adolescents suffer from depression and long-term depression. And so they attribute that to essentially, a lot of them, to the fact that it's the external world that is causing their depression, and if they can just change that external world, everything's going to be better. But you came to a very different conclusion, that your depression really had to do with the way that you were perceiving the world rather than what the world was doing to you. So what was there in your environment that essentially set you on a different path than 90% of other young people that age?
That's a good question. I guess even though I was very depressed, I still believed in myself. I still wanted to be on my own. I wanted to be on my side, and I guess maybe I just had a vision. Maybe not consciously. I wasn't like, I'm gonna make this vision, but I had a vision of what I wanted. Once I hit that point of realizing where I was, and where I didn't want to be. So I would say maybe that was a lot of it, kind of getting to a point where I was like, okay, this isn't sustainable. I've got to change. And I know around that time, I can't remember if it was before that or just after that I started listening to, like Eric Thomas, Les Brown, Tony Robbins, and those people every morning and every night. So I can't remember if that helped me get to that conclusion or if that was afterwards.
Mhm.
So, but
Yeah.
that helped a lot too.
Yeah, well, and of course, the other thing of interest is that at that age of 15, 16 years of age, you had already decided that you wanted to be an investor and a business owner. And once again, most young people at that age haven't even heard the term investor, and so have no clue about even thinking about that to any great degree. So what was it in your life that you knew that you wanted to be an investor?
So actually, that was actually when I was in 8th grade. We were going on a family vacation. So we were living in the San Francisco Bay Area. We were going down to Southern California for a couple days at the beach, and we were going to drive there, which is with traffic, it's like an 8-hour drive. So I was going to bring a book to read, and I had kind of read all the books that were on the shelf except this one book, and it happened to come from the Cash Flow for Kids game. And it was called Raising Your Child's Financial IQ by Robert Kiyosaki. So it wasn't the Rich Dad Poor Dad, but very similar concepts, but it was for like geared
For young
towards
people. Yeah.
parents teaching their children. But anyway, I hadn't read it, so I was like, oh, I'll just bring that, whatever. And it totally changed my outlook on work, investing, life. It just changed the trajectory of my life. I read it cover to cover. I was so interested in it. I was asking my dad all these questions and, just trying to like understand everything in it, all the concepts. And, up until that point, I thought I was just going to have a career where I could earn a good income and make a lot of money, work really hard, save it, and then retire early. And so that just changed it for me. There's obviously nothing wrong with doing it that way, but when I learned that there was another option, I liked it better. And I saw the power of investing. And so
Mhm.
I was totally hooked into that. And that was my ultimate goal starting from that age.
Well, interesting trajectory there. So, how did you step into to real estate investing?
Well, I had been doing, different kinds of investing. I'd started a business or two before, and they kind of were the training wheels, I would say, just to learn. And I did some other jobs and everything like that, just to learn different aspects of business. And I knew I wanted to get into real estate investing once I had everything kind of ready to go. I guess once I was old enough and ready to do it. So when I was 20, my partner and I actually bought our first real estate property. So he's my partner in business and in life, actually. So he wanted to buy a house, and I said, I'm not buying a house unless it's an investment. I don't want to be tied to an expensive mortgage, especially here in the San Francisco Bay Area, where I have to, work somewhere in order to pay the mortgage and not be able to maybe take some time to start my own business or something like that. So to me, it felt like more of a tie than I wanted, unless it was able to bring in some income. So we ended up doing a house hack, and we lived in this little 300 square foot ADU with our daughter, who was like 5 at the time, while we remodeled it into a 2-bedroom, 1-bath. We had rented out the 3-bed, 2-bath, which was obviously the bigger unit. And that was our first experience into real estate investing, and we loved it. My partner now is a general contractor, an electrical contractor, and so it was right up our alley to be right in there doing the construction, doing the value add to this property. And yeah, that really sparked where we are, where we are today, which is different than a house hack, of course, but now we're doing apartments and all that.
Mm.
But that was the beginning.
Well, I think that's an excellent way for people to get started. It was the way I got started. It's there's nothing that's totally risk free, but it's as close to risk free as I think you can possibly get. And it almost always pays off. You've got a place to live, and somebody else is making the mortgage payment for you. How can it get any better? When you're just starting
Yeah.
out, it's a wonderful way to do it. Well, let's talk about reduction of risk, as certainly the more we can reduce the risk, the more likelihood it is that our investment outcome and return on that is going to be good. So talk to us about reducing risk.
Sure. So to start with, a lot of times I actually get asked about that because we focus in our company on investing in distressed apartment buildings, apartment communities. And a lot of times we hear, oh, isn't that really risky? And yes, it can be. But the reason that we focus on that is because we have the experience and the background there, right? So we wouldn't focus on that if we didn't have that, because that would be extremely risky. So I think one big important part, or one big factor of risk mitigation, especially for passive investors, is to look for areas that they already understand, and if not, to get really, really educated in it, and to look for sponsors who have ideally their sole focus and experience in what they're doing and in their strategy. So I think that's one of the biggest ways to mitigate risk, is to just know and understand what it is that you're doing. So simple, but a lot of people, I think, get really excited and skip some of this step sometimes. So that's a big one.
Yeah, absolutely. I totally agree. Is that knowing what you're doing is one of the best ways to reduce risk. Well, you had also mentioned the aspect of sponsorship. And so what suggestions do you have for passive investors when they are out there looking for sponsors? Because that's a great risk mitigation process as well.
Absolutely. Yeah. So in our company, and in a similar industry, there are a lot of passive investors looking for equity placements in these apartment complexes that we invest in. And so when you're looking for something like that, one of the biggest areas of risk actually isn't even the deal. That's an area as well, but the biggest area is really the sponsor. So looking at their track record, looking at their experience, looking at who they are, their background. Some people will do background checks on them. You're going to be putting a lot of capital with them, so you want to make sure that you can trust them. Do you like them? Because if you don't like them, there's probably a reason, and you should listen to that. And vice versa for us on our side. A lot of times if we're talking to investors and it doesn't seem like a good fit, maybe even just, personality wise, it's like, hey, maybe we're not the right fit. We want to invest with people that it's going to work well, and vice versa. That I hope that, other investors are taking that into consideration as well. So some of those are really important. Additionally, just, it's really a trust but verify, right? So you can ask them all day long, questions all day long, and they can give you exactly what you want to hear, right? But to be able to go and talk to previous investors, and maybe ask for some references, look them up, see if there's anything associated with their company or their names, look at their profiles online, just really doing the due diligence on the sponsors and doing deep due diligence there will go a really long way, and is kind of the that one thing that you can do to put yourself in the best situation and the least risk situation as well, to set yourself up for investing.
Enlightened investors, if you haven't done so already, be sure and click that like button and also click that share so others can take advantage of the content. And finally, be sure to subscribe so you don't miss a single one of our upcoming episodes. Yeah, for sure. So yeah, it always goes back to that know, like, trust, and as you say, to verify. Our intuition is great. And we shouldn't discount our intuition, but we definitely need to verify that with the facts. What are some of the top risks that you see limited partners or LP passive investors making when they are considering investing in real estate?
So once it gets to the point where they're looking to invest in a certain deal or anything like that, there are a few that I've seen. I've spoken with some who have had these experiences, with other sponsors. I think one of the top risks is when somebody is new. They've learned a lot, but they're new and they haven't had the experience yet. I think that's just more risky in that they just don't know what they don't know yet. And obviously you have to start somewhere, but I think when you're in that position, you just know that sponsor and get second opinions on the deals that they're sharing with you and the terms that they're bringing to you. And yeah, definitely just have other more experienced eyes take a look at it, because if there are any red flags that maybe you missed, or maybe just it doesn't align with your, with your goals as well as you might have realized down the line, then they're going to catch that. So being able to know the sponsor and do that is I think something that would help mitigate risk there. In addition to that, I do sometimes see that investors will, at least from other deals, a lot of times new investors that I will talk to will tell me about some of their previous deals that they've done. One thing I would say is, looking deep into the due diligence, not necessarily just taking it at face value, because not all sponsors are out there to get you. I don't want to make it sound like that at all. Some are just newer sponsors, and maybe they just missed something or don't know. But as an investor and as your capital, it's your responsibility to make sure that you're placing it with people and into deals that are solid. And it's also the sponsor's responsibility to make sure that they're doing that as well. But at the end of the day, it's your capital, and you're risking that capital. So you definitely want to make sure that that underwriting and those assumptions that are being made and all those things are up to your comfort levels. And so that's something that usually, at least in our company, that's something that usually sponsors are happy to provide and to share. And, ideally they've been stress testing these things and all of that. So those are all things that you can see. So, a risk would be if they maybe aren't willing to show you, or if you're not able to get that in-depth look at it. I think that would be a very big risk. So definitely always make sure that the sponsors are willing to do that.
Yeah. And, we always tell our investors to consult with their financial and legal advisors. Yeah. And quite frankly, I think that is a risky thing for new investors to do, because if they're new into investing in real estate, their financial and legal advisors very likely know absolutely nothing about real estate investing.
That's probably true.
And even though they're financial advisors and legal advisors, they, more times than not, they tend to be the blind leading the blind, and they're more harm than good. So yes, seek legal and financial advice, but be sure that your financial and legal advisors know what they're talking about when they're talking about real estate, because it's a very, very, very different type of investment than investing in Wall Street, which is what your typical advisor is going to be used to doing. So, Alex, tell us about KGI Capital and what you have to offer, and how our audience can get in touch with you to take advantage of those things.
Sure. So we, like I was saying, we invest in distressed properties. Typically, we look for around 20 to 100 units in the Midwest and Southeast. We've been mostly focused on Florida, Indiana, Texas, and Oklahoma. And we do that usually through syndication. So we invest, we work with passive investors, and we go out and find the properties and we make it happen. So we typically do a couple deals a year. So we're not super huge. We're growing, but we're always happy to speak with new investors. And if you're newer to the game, we have a lot of resources for education and that kind of thing, so that you can learn and reduce your risk. And then if you're more seasoned in the game, we also have, different things that you might want to see about our company and our track record and that kind of thing that we're continuing to build. So feel free to reach out to me. The best place would probably be either LinkedIn, just Alex Kingman on LinkedIn, or our website, where you can schedule a call, and we can chat further that way as well. So our website is www.investwithkgi.com, and I'm always really excited to talk to new investors and to learn more and see if I can help. And if we're not a good fit, then I usually know another good sponsor who is. So I'm here to help. I'm not here to, force anybody into the wrong investment. And so I'm really excited to speak with anyone who's interested.
Well, Alex, one last question, and that is, can you share with us one of your most difficult setbacks in life, and how did you come through that time, and what was the lesson you learned from that?
Well, I would say one of my most difficult setbacks was when I was a sophomore, when I was depressed. That was definitely really hard. And I think I learned from that is, I think what I learned from that is that one, I felt that it was kind a bit of a long shot from where I felt I was to get back to being, as happy as I felt before. And I was able to do it. So I think I learned from that that anything is possible and we have one life to live. And so we need to live it the way that we want to live it. And we need to do that now, not someday. And not go in indirect ways to try to get there, but just go for it. So that's what I've focused on doing since then, and what I try to exemplify for my family and for my kids as well.
Well, wonderful. Well, Alex, enjoyed having you today. Thank you for sharing your experiences and insight. It has been a pleasure. And enlightened investors, thank you so much for being with us. Always a pleasure to have you with us. Please take a moment to like, share, and subscribe, and go to Apple Podcast and leave us a rating and a review. Until next time, live abundantly, and we'll see you in the next episode.
Enlightened investors, wait, don't go just yet. I just want to remind you about our recently launched webinar that you will not want to miss. If you're at all curious and would like to learn more about how real estate investing can diversify your investment portfolio, alleviate the anxiety associated with Wall Street swings, leverage your 401ks and IRAs to substantially increase the return on your investment, and do all of this with turnkey, hands-off, passive real estate investments, then you'll want to immediately go to stevetalker.com/webinar. In the webinar, we'll also address the common dubious investment schemes that you want to avoid. To access the webinar, go to stevetalker.com/webinar. I look forward to seeing you in the webinar.
Thank you for tuning in to Real Estate Investing Abundance, brought to you by Steve Talker Capital, a company working for passionate professionals like you to develop financial independence built on solid, passive real estate investments. As part of our efforts to make the world a better place, Steve Talker Capital contributes to activities and organizations committed to better understand the equine. These endeavors attempt to enhance the human treatment of horses worldwide. Steve Talker Capital, working for a world where all creatures, great and small, flourish abundantly. For resources to develop your financial independence, connect with us at stevetalker.com.